All right, now we're talking back to work. Boy, weekend is finally over. Boy, do we have a lot to catch up on. Boy, lots happened since the last time we spoke together last week. It's Monday evening. We're getting ready for what could be a very, very busy week ahead of us. We got Tuesday coming right around the corner. And man, do we have some fantastic trades to look forward to tomorrow. I'm going to cover all my favorite trades in the video tonight. That we have a game plan to make some money on Tuesday. Before we jump in and get the party going tonight, make sure you subscribe to the channel. That way you don't miss tomorrow night's video. And if you enjoy this stuff, as always, hit that like button. Give me a shout out. Give me a holler down in the comment section. Great to see you back here once again. Hope you had a great weekend. Hope you got some rest though, because we have quite the week ahead of us here. Tuesday, where are the best trades? Setting up for what should be another great day tomorrow in our trade room. Boy, there are three components on the chart right now on the NASDAQ and the S&P. If you understand those three components, plenty of easy money-making opportunities for tomorrow. First of all, bear markets. We never got that squeeze we're hoping for on Friday. The bears certainly have their hooks in this market for now. Maybe not forever, maybe not by the end of the week this week, but for right now, the bears certainly have their hooks. That's one thing. Second thing, range market. Second clue, second component is a trading range. And the third component, possibly the most important component on the chart, big time support levels. So three components: bear market, trading range, big time support levels below those trading ranges. If you understand these three components, there's plenty of money to make on Tuesday and really the rest of the week. And I'm going to go over why I say that and how you can capitalize on these three components here as well. Now, before we talk about my favorite trades setting up for tomorrow, let's all get on the same schedule for tomorrow. Tomorrow, of course, is a Tuesday. Man, do we have a lot going on right now. Take a deep breath and let's get right into it. Now, there are two things that you want to be aware of for tomorrow. First of all is the durable goods order at 8:30 Eastern time. That will kick us into gear. And then, of course, you got the home sales number coming in at 10 o'clock, combine that consumer confidence number at 10 o'clock Eastern time. Those are the two big catalysts that we know about that we should be paying attention to here for tomorrow. The durable goods orders, yeah, definitely watching that, but you know me, anytime I have a big Red Star news event around that 10 o'clock, top of the hour, you better be paying attention tomorrow on that 10 o'clock to 11 o'clock block. So 8:30 news, 10 o'clock news, that's what we know about. Now, the second component for tomorrow, unless you were living under a rock this weekend, you heard all the news about the mutiny, the failed coup in Russia, whatever you want to call it. I'm sure you already know what's going on right now, but this leaves a ton of questions left unanswered that hopefully by the end of the week this week we'll know more information. But what does this mean for the situation in Ukraine? What does this mean for the country of Russia overall? Well, supposedly we're going to be hearing from Vladimir Putin this afternoon, later on this evening. I don't think anybody knows what to expect here, and that's definitely going to be a big known unknown for tomorrow. We'll do our best tonight, obviously, but that is a big variable that we simply cannot anticipate completely. So the two news events we know for tomorrow, we know when those are, but I'll tell you, we might have a very different world on our hands a couple days from now, so we're going to be keeping an eye on that. They'll be developing, of course, continuing the rest of the week this week. And my goodness, looking at the rest of the week this week, we have a doozy in front of us here. We got Jerome Powell coming on Wednesday, GDP and jobs on Thursday, and arguably one of the biggest reports of the month is that personal income number coming on Friday. On top of that, it's the end of the month. It's the end of the quarter. And oh yeah, just in case you want a little bit more spice in your life end of the week this week, we've got a ton of CPI inflation numbers. We've got Italy, we got France, we got Germany coming out. Ooh boy, right? It's going to be a busy end of the week. And don't forget, next week is a holiday week. bring on the volatility. It could be a very, very busy week for all of us here this week. Remember, though, stay focused right now. We know when those durable goods orders and home sales number are tomorrow. We're going to be keeping an eye on what happens in Russia. Again, who knows? Grab your popcorn, though, kids. This could be a somewhat eventful week as far as geopolitical stuff. Now, back to our charts, though, right? Because we all know the money is made on the charts right now. And speaking of money, if you like making money, make sure you watch the entire video tonight, because every trade I talk about tonight on the S&P, the Nasdaq, the SPY, and the QQQs can be interchanged back and forth between each market. I'll give you reason to stick around all the way to the end. Let's begin first here on the E-mini or the SPY. A couple things you want to be aware of here for tonight. As always, these are tick charts. You can see all the time frames in the upper left-hand corner. They're all tick charts, and that is the 21 EMA. It's not the only indicator that we use in our trade room, but it's one indicator that really makes it easy to find winning trades. So now that you know what you're looking at, what's the most important factor on the chart right now? What's the most important factor? I talked about those three things, right? Bear market, trading range, and support. Let's back out one level here and let's go up to the 60-minute time frame, because the 60-minute chart, as you guys know, I really lean on the 60-minute chart to give me directional filters, right? Directional bias. Obviously, right now you can see the bears have quite a bit of their hooks in this. Now, if you watched last week's newsletter, I talked about how kind of, unconvincing this move off the 21 moving averages. I'm not going to go back into that a lot here tonight, but remember, we had a lot of bulls going higher leading up to this big pullback, and notice the difference in these two moves. Look at how aggressive the bullish move is. And again, if you watch last week's videos, we talked quite a bit about this. Anytime we see a very strong move up like this, we're expecting a deep pullback and a retest of that high. That is very much still in the cards. Now, it may not be easy at this point. The situation happening in Russia is a big question mark. The CPI numbers coming out of Europe later on this week are a huge question mark for that. But I wanted to see, though, where we are in the bigger picture. Let's go back to the beginning of the month of June. Remember, the month of June began with a red hot tone to it. It popped up into a trading range. That trading range is a huge, huge clue, because if you're a member of my trade room, we love what's called a breakout pullback, right? Oftentimes we'll see ranges, they'll break out and then they'll pull back right at the top, right, of that prior range. If you've been watching these videos the past few months, this should not be new to you. We talk about this quite a bit. Well, you'll notice where we are right now, right? We're now sitting right on what I would consider to be some very significant support on top of that trading range. Now, again, do I think we're going to rip higher here and run right back to retest the high? Doesn't seem as likely right now, right? We definitely felt that way last week. Doesn't seem as likely right now. So I do think though, because of these major support levels, I do think there's plenty of buying opportunities off of these lows right now. And I also, because of this obvious bearishness that just simply won't go away, right? Won't leave the buyers alone. And because of kind of the unknown CPI inflation numbers and the situation in Russia right now, I think we can easily play both sides of this market. The key will be, of course, is making sure we buy as low as we can, keep in mind on that, and try to sell as high as we can. So I like the idea of both sides of this market. If somebody asks me how to describe this market right now, I would say we're very much mixed, right? We're almost a neutral market with a little bit more of a bearish tone to it. Obviously here, you can see in front of us. So with that said, let's now go back to our main chart. Remember tick charts. Tick charts make everything easier. And really, when you look at this chart in front of you here right now, you can probably see kind of where I'm going to go with this, right? My range is a magnet. I've got lots of support levels down below me. I would love to grab some crown reversal patterns, right, off of these lows. I would also think, too, that as we roll higher, we're going to have some shots to sell this thing back down again, right? So I got those trades on my radar for tomorrow. I do want to talk a lot, though. I do want to talk a lot about, though, kind of if this market does pop up, at what point can we buy it? And at what point can we sell it, right? Because if it really rips higher like that, there's going to be a very small detail that you'll want to be aware of to know whether it's a buy market or a sell market at that point. All right, so that's kind of the basic idea behind this. Now, if you're taking my free trading courses, right, we talk about what's called a crown reversal pattern in the free trading course. It's a failure pattern. So as we're trying to be a buyer going back up into the trading range right now, buying off these key areas of support, the problem is momentum, right? That's the problem. A lot of bearish momentum. So you know me, I'm not a big fan of trying to pick bottoms. The way that I like to buy off support levels in a bear market is I like to use this pattern. It's basically a failure pattern with a bear trap mixed into it. You'll learn this, of course, in our free trading course. Now think about this, right? Horrible place to be selling, right? A horrible place to be selling. You're at support, below a range, right? With that big breakout pullback I mentioned on the 60-minute. If I can get bears coming in and trying a couple times here, where the money is probably going to be made on this is a bear trap coming in off of that, right off of that low. Now look at how I draw this right now. It's one try. It's two tries. Notice how it's a higher high and that trap low. What this does is this basically wraps together both a failure pattern and a trap pattern that you guys are learning in my free trading course. Now, I'm going to be talking a lot about this pattern setup. I have probably 100 examples of these pattern setups in my free trading course. So if you haven't taken the free trading video series yet and learned that strategy yet, I'll put a link up there for you. That way everybody can kind of learn these entry setups, especially if you're watching here for the first time right now. Grab that link that popped up, take that free course. The strategy you'll learn in that short video series will teach you a stupidly simple trick to tell you exactly where the best winning trades are going to be each day. And I'll make it easy to start making money on your own. You'll learn my 4 favorite entry patterns. If you're taking too many losses, if you're missing the best trades right now, if you're not getting the consistent results that you want, definitely grab that link, take that free trading course. I'll put all the links, by the way, down in the description of the video. So if you missed that link popped up there, look in the description. There'll be a link there for the free trading course. And you'll learn, you'll see a lot of examples of these, what we call crown reversal patterns or trap patterns. Now, the most important thing is as we go lower, right? If we do end up going lower here, again, we're at big time support, ranges above us. So I'm going to keep on looking for that same classic pattern, right? The 1, the 2, and the key is going to be looking for those traps. Okay, that will be the number one priority because remember what I said earlier, if you're trying to buy the bottom of a bear market like this, okay, the key is you got to buy as low as you can because you don't want to buy it as we're going higher, right? Because what's going to happen? What's going to happen as we go higher here? As we go higher, more bears will come in and try to whack it back down again, all right? Like we've seen the last couple days. Now, eventually, one of these moves higher is likely to be a big pop, right? Eventually, we just simply don't know which one it's going to be. So the goal right now will be to pick our spots wisely, use those 2-try failures with that trap low, get in, right? Take some profit, and hopefully one of them will be that big spike higher. And we'll talk about the move going higher here in a moment here. Don't you worry. Now, what if we don't get that? What if the market simply rips and runs higher here and we don't get that 2-try failure or that crown reversal? The next best thing is to keep on focus with traps. Okay, so this may not feel like a crown reversal pattern, right? But you want to be thinking about traps on the way higher, right? So as we go higher, the key is buy as low as you can, right, with those trap patterns. Now, again, I'm going to talk more about going higher here in a moment. For now, though, let's run through a scenario, because remember, nobody knows what's going to happen the next 24 hours, the situation happening in Russia. This situation may also be in play for tomorrow. We talked about the term breakout pullback. Breakout pullbacks, I think, are really kind of the main theme as we go into, at least for tomorrow's trading session. This is a trading range, right? So if we end up running lower here overnight, could easily happen, right? Putin will talk about whatever he wants to talk about this evening, right? Who knows how the markets will react to that. Now think about this. Think about that crown reversal, right? Same pattern off of that low. But now as we make that run going higher here, remember, markets love to break out of a trading range and then pull back and then roll back lower again. How would I trade that? Okay, how would I short that breakout pullback? Remember, breakout pullbacks work in both directions. Well, what's the concern here? Yeah, the concern is we're sitting at a lot of support. And we have to anticipate that because of that support off the 60-minute, we're probably going to see quite a few buyers try to punch this thing going higher, right? And again, there may be something like a bear trap, like I mentioned earlier, right? Remember, if we keep going higher, remember, if we rip higher here, you want to focus on buying as low as you can, right? This is not a bad idea there at all, okay? Now, back it out though real quickly here. If we start seeing these buyers come in and they try once and they try twice, right? Remember, at this point, the buyers are trying to run this thing, take out some of these highs, potentially get a big pendulum swing off the low, up around that high, right? So we have a feeling those buyers are going to come in there and try to whack it and run it higher here. If I can trap those buyers in, I can then use their stops as fuel for a run back down to retest the low, right? Target, of course, will be back down to retest the low. We'll find some bigger objectives tomorrow morning in the morning trade room. So think about that scenario, right? Think about that scenario. We run lower. Remember, we do not want to sell low. We want to sell high, right? We want to buy low. Again, we're very bearish, so we trap the bears in. We use their stops as fuel for that run popping back higher. Right? We take our profit off at the underbelly of that range. Leave a little piece as a runner. Leave a little piece as a runner, right? As we try to go higher. Then, once we start to get back up into that trading range, now, do the buyers rip it higher and keep it going? We'll talk about more about that in a moment. Or do the buyers struggle? Once they begin to struggle, now remember, I could be a lot more aggressive on this short, but I'm worried about being right in this support level on the 60-minute, right? So I have to get these buyers to commit. That way I can use their stops as fuel for a run back down to retest the low. Crown reversal, bear trap off the low, and then ultimately a breakout pullback with a little bit more of a conservative entry on this because of the situation and where we are sitting at major support right on the 60-minute. All right, guys. So that is definitely something on my radar for tomorrow. The last few weeks, really, ever since quad witching 2 weeks ago, there's been a lot of money to make out there. Every time it drops in, 1, 2, back up. We talked a lot about this last week. So I definitely do think there is money making opportunities, buying the moves going lower, just so we don't try to pick the bottom though, right? Make sure that we are trapping those bears in and buying now into stops. All right, let's keep going, and then we'll jump over to the Nasdaq and we'll talk about the Nasdaq. The Nasdaq's a little bit different scenario, so we'll cover that here in a moment. Now, as we make our run going higher here, this is going to be a lot of bullish momentum off of this low. Ranges are really, really important because anytime we break below the low and we end up rotating off the low, it creates almost a bit of a slingshot effect. In fact, some of my favorite reversal patterns we look for in our trade room is getting underneath the range, trapping in, and then slingshotting back up, right? Roughly about the amount we go below to the amount we go above. By the way, I talk all about range-bound markets, how to trade these kind of slingshot reversals. I cover most of those details in that free trading course, so make sure if you haven't yet, grab that link up there in the upper right-hand corner. What I want you to be aware of is even though we are bearish in the longer term right now, even though I like the idea of selling into this overhead resistance, the reality is this rotation off the low is going to be very strong for the buyers. So we need to get something along the lines that we saw right there, where it popped up, the buyers once, the buyers twice, and then back down. So that pattern, right? We pop up, buyers once, buyers twice, and then back down, okay? So we want to see it go up, right, up into resistance. But then in order for me to sell off the high right now, again, a lot of momentum there for the bulls. Let those buyers try a couple times. I'm not in the business of picking tops, right? It can be very difficult to pick that top. Once those buyers get locked in, though, now we have their exits, right? Now we have all of their stops we can use to fuel this move now going back lower. Now, let's think about this. So if we do get that, this would be in the free trading course, this would be a buyer failure pattern, right? Off the high there. If we were to go lower, knowing what you know so far in this video lesson, what do you think is the best way to short this thing? Remember, we talked about this earlier. We want to sell as high as we can. Why? Because we have a lot of support on the 60-minute. How do you sell as high as you can? You sell with a bull trap. Absolutely. This is where trap patterns are really going to be a necessity as we go lower because of the general location here. And you might notice this is pretty much the same game plan, but flipped upside down as it is to buy off that low, right? As we're buying off that low, we're looking for bear traps on the way higher. As we trap those buyers in above the moving average, get the momentum to turn over. Now we focus on selling as high as we can with the trap set up right above those prior swings. If you are a member of my trade room, or if you've taken that free trading course, a lot of examples of these where what I'll do is I'll go out and I'll draw a trend line off those lows, right? Pin it up around the high. And then what do we always say? Don't miss the first test off the high of that channel. Okay, that first test is the best test off the high there. We pretty much know where the market wants to go, right? It wants to go back down to retest that low. And then what do you think? As we end up around that low now, what do you think? We're exactly right. Bears once, bears twice. Crown. Now remember, you want a crown reversal off of this low. You want that bear trap, because we are pretty much overall bearish right now, and so you want to buy as low as you can. So rinse and repeat, right? The crown reversal pattern off the low, trade that rotation up to the highs, trap those buyers in, and then get that roll back down as I described earlier on in this sequence. Now, I promised you earlier there'd be some more. Let's talk about going higher here, right? Then we'll grab the Nasdaq and we'll kind of show you how those are going to be different here for tomorrow. So one thing you want to be aware of is there's a very big difference between a strong shot higher and a pullback and a jump off that moving average, okay? So, for example, again, you know my game plan, right? I'm looking for some bear traps to trade this breakout pullback off the 60-minute. I like that a lot. This could easily squeeze and really, really rip, right, and run higher. But as we oftentimes see in this bear market right now, the higher it goes, the more sellers are waiting on this. So this is not a bull market per se at this point. It's simply a very strong bullish reversal off of that low. We still want to go out now, but we still want to go out now and let those buyers try a couple times and try to rope those buyers in and use those stops as fuel. And again, if we do end up rolling lower, think about those bear traps on the way down. So I just want to make sure you know that variable is in play here, right? So if it really punches higher, again, all that momentum we talked about earlier, right? Not a lot changes. We still want to get the buyers roped in. Still a lot of momentum for the bulls and an overall bear market. So we use that to try failure pattern to sell off the high. And then as we're going lower, drawing trend lines off those lows, up around those highs, looking to pick off those bull traps for that run back down to retest the high here. I like that a lot for tomorrow as well. The one key difference, okay? The one key difference is if it does this. If we pop higher here, if we run into that moving average and we jump off of that moving average, okay, what this does is this gives the buyers control of pretty much control this market right now. Whoever holds the pullback off the 21 EMA right now is the bears, right? The buyers have not gotten anything going here yet. Right now, the bears have control. But if the buyers, if they pop up, okay, and they take control of this and they rip this thing and run higher, that now becomes a bull market, right? Now becomes a bull market. Knowing where we are in the big picture, we still obviously have to worry about more bears coming in above these highs, but it gives the buyers a lot more to look forward to. So how do we trade it? If we pop up, pull back here right now and jump off that moving average. Now, if this is more of a bull market right now, I would go out and draw a trend line off that high. I would draw it off that low, and I would look to get underneath the moving average for a seller failure pattern and a retest of that high, right? If this is more of a bull market and I see a 1, 2, 3 reversal, a very strong reversal off of that low, it's usually almost a guarantee we go back and retest that high. It's not a bull market right now, though. That's the challenge that we'll have here for tomorrow. So if we do end up pulling back, holding, and jumping, I can't be a buyer up here, right? Not until we can break and kind of hold above some of these highs, because the last few weeks we just haven't been able to do it, right? So right now we still look for a short back down into these ranges. And again, a lot of this is kind of waiting on more updates out of Russia and Ukraine here. How would I sell? Remind me again, how would I sell a market that turns bullish and I'm at resistance? It's the same pattern idea that we had back here. What was it called again? It was called a crown reversal pattern. Now, again, it's a 2-try, but it's going to be a little more patient of a short. It'll be a bull trap above the high. The reason for this, again, is because when they hold that pullback and jump, it's a bull market now, right? Remember, if it just jumps, it's just a deep pullback, right? The variable is that pullback off the moving average? Buyers once, buyers twice. Inside the free trading course, you guys are learning about signal candles, right? A trap signal candle for that short back down, strong red candle closing firmly below the moving average. Stops are sitting right here again, right? So keep an eye on that one. Another one you should watch for tomorrow is if we do end up 1, 2, 3 and that break going higher, sometimes what happens is sometimes there's so many bears up there, right? It'll simply V-top and begin to grind down as we go. If that happens, pretty simple, mark off that low, see that? Bring up around that high, and then look left, find some prior swings, and focus on selling as high as you can. I want to get above one of those prior swings, right? These kind of V-tops can be very difficult sometimes because you don't want to sell it as it's going lower. And we want to be selling as high as we possibly can, and so that little V-top will turn into what we call a pop and grind channel or a pop and grind reversal off of that high. All right. Now I realize I'm going over a lot of different scenarios right now. There really are a lot of different ways to game plan this thing for tomorrow. So don't forget, we're gonna trade this stuff tomorrow morning in our trade room. But that is the general idea here right now on the E-mini S&P. Let's go grab a look at the Nasdaq. I know I've taken up a lot of time on the E-mini, but I think you'll notice right away this will kind of fold into the Nasdaq here pretty well. Nasdaq, 3 components, right? 3 components here. We've got the overall bear market. We have the trading range overhead, right? And we are sitting at quite a bit of support here right now. Go back to that 60-minute chart. And I'll tell you, the Nasdaq is just it's a beautiful chart, really. We've got that big breakout, that big move up early June, right, into that trading range. We get that. Remember I said earlier we get those slingshots off a range rotation? That's that trading range. This is what I was talking about earlier in the S&P, where I said sometimes they'll break below and slingshot, right? Look at that. That's a great example of what kind of a slingshot breakout looks like. But again, the most important thing right now is look where we are. Look where we are right now. That big breakout range popping up. it really should come to no surprise right now that we make it all the way back to this area because, again, breakout pullbacks are very, very common in a range market. It almost feels like the market may have got a little bit ahead of itself there as we went into quad witching and, of course, the FOMC there a few weeks ago. Now, as we go lower, the market pushes into this trading range. That range, of course, is a huge deal now for both the buyers and the sellers, right? Think about it, right? The buyers are looking at this going, okay, there's a range above me. I can probably buy a breakout pullback off of this previous range, okay, and try to go back into that range above. I do think there's plenty of ways to buy this thing the right way, of course, right? Not simply trying to pick that bottom. At the same time, you can easily think the sellers are going to see this trading range. And we already know that breakout pullbacks are very, very common. At least they are in our trade room each morning, right? So breakout lower, that breakout pullback could also easily be an area for some shorts. So again, the same basic principles apply we mentioned on the S&P. I like the idea of trading off the bottom. I like the idea of the long side. We really have to make sure that we're buying as low as we can right now because as it gets higher, you've got breakout pullback, you've got channel, lot of overhead resistance. Now here's one last thought on this. Is it possible for us to get that same slingshot going higher? It certainly is, right? The challenge we have right now is the sentiment in the market. The sentiment it's horrible right now. You know, we're going to hear from CPI numbers in Europe later this week. We got Powell coming on Wednesday. Ever since Powell testified last week and made it very clear that they were not done raising rates, they were not quite sure about inflation being whooped, the sentiment has been very, very heavy. It's been a bit sour, and that really is kind of the big variable. I would normally think that a big slingshot off that low in this situation with a big, strong run up, I would think that eventually we would get that big pop back higher. But with that kind of invisible hand, that market sentiment being so bearish right now, it's tough to tell. My goal this week, as we mentioned in the morning trading this morning, has been just to keep on trying to get in down here and see if one of them will give us that big rip off of that low. It's just very difficult at this point to tell exactly which one it's going to be. But that's the way trading works, right? That's the way trading works. We take our trades, get rid of risk, take quick profit, right? And then see how far they go here. Now, let's get back to our faster time frame here right now, and I think you'll start to see kind of where this all comes together. This is that big trading range, right? There's that big trading range we just talked about on the 60-minute. You have to think that is kind of the big magnet on the chart right now. Here are the major levels of support, and you can't look at this chart and not see that pendulum swing. The amount we go above the range is the amount we go below the range. This is I'll tell you right now, very difficult area to be a seller down here. Could it go lower? Absolutely it could. With all the variables we have that we talked about earlier, this could easily continue going lower here. But I'll tell you, if we can get one of those crown reversal patterns, we can get some of that off of these lows. I really like the idea of giving a shot here for that potential run back up into that range here. So same basic idea as we had on the S&P, right? It could be here, it could be here, it could be really any of these key levels I have marked below me. The key will be, though, getting in as low as you can, right? So either a crown reversal off of that low. And again, remember, all a crown reversal is kind of a fun way to say a two-try failure with a bear trap. It wraps together those failure patterns and trap patterns you guys are learning in the free trading course. If we were to snap and run higher, the goal will be getting in as low as possible, right, on the way higher. And like I mentioned earlier on the S&P, we have to be realistic with our expectations. Right now, there's a very good chance we pull back to the underbelly of that trading range and we see another shot going lower, right? So we want to take some profit off in that area, but I think you're foolish for taking the whole trade off. I would love to leave a piece of this, right? Because again, range above us. Number one of these has the potential to really rip. We just don't know which one it's going to be, if we'll get any of it anytime soon this week. It's a very big variable. And then as we go back higher again, what do we do now? We take some profit off at overhead resistance. We then look and see, do the buyers hold this and keep going? Right? Or do they struggle 1, 2, and then use their stops as fuel, right, for that run back down to retest the low? And I don't want to repeat myself too badly on this, but as we're going lower, what do? You sell as high as you can, and you look for those bull traps. So as you can see, the name of the game tomorrow is failure patterns, trap patterns. You guys will be experts on this if you take that free trading course, right? So anyways, that's the scenario I'm looking at as we go here. One very big variable I think in play right now here on this Nasdaq, which is a little bit different than the S&P. If we were to really spit and run higher, remember that's not a reversal, right? It's simply a sharp pullback. At that point, buyers come in, try a couple times on the moving average. Still a very good chance that we end up right back down to retest the low. Remember, strong run off the high, off the low. That's going to want to continue going higher. So let those buyers try a couple times. Rope those buyers in. Don't try to pick that top. Simply use that two-try failure and short that thing back down to retest the low. If they do end up popping up and we do hold that pullback and jump off that moving average, see, now I think these buyers have a much better opportunity now than a market like the S&P did, right? Because the S&P is going to run right into its high. Look at all the open space the Nasdaq has now. Okay, so if we can remember the key here is we're not talking about a double top. Okay, we're talking about jump, a very convincing jump off that moving average. When that happens now, you know where the buyers want to go, right? They want to take out some of those highs there. Now we mark off that high. Now watch closely. We draw off the high, we bring it down to that big low, and then what do? We go looking for swings. Look left, find swings. That is usually right there. That is usually where the money is made there. The key is get underneath some prior swings, because that's where traps live, right? And then get underneath the moving average, get the bears to come in, try to sell it short, use their stops as fuel for a failure, maybe a pullback combination. And again, you know where those buyers want to go. Now, once we get up around these highs now, this is where you got it. A crown reversal comes in, up, buyers once, buyers twice, bull trap off of that high. Because if we end up all the way back to that high at some point tomorrow, it'll be a very bullish market, and we have to make sure we're selling as high as we can with that crown reversal that we mentioned earlier. All right, guys? So again, I know there's a lot of variables on the chart right now. I wish it was cut and dry for us, but that's why we have a trade room. I'm going to game plan tonight, kind of visualize what I want my setups to be for tomorrow, and tomorrow morning, we're going to get after it. We had a very busy, very good day today in the morning trade room. Be more coming tomorrow, so don't miss tomorrow morning, 8 o'clock Eastern time. I'll put all of the links you guys need. I'll put the free class links. I'll put the membership links. Everything you need to be down in the description of the YouTube video. If you need help or have questions, the easiest way to get help, especially if you're getting access to our free trading classes, is to call the office or use Skype or use live chat. If you need help and you reach out, we'll be there to help out every step of the process. Guys, hope you enjoyed the video tonight. Busy week ahead of us. Keep an eye on those breakout pullbacks. That's the name of the game for tomorrow. And boy, oh boy, busy week ahead of us. Be well, be nice to each other, be here tomorrow, and hopefully I'll see you tomorrow morning at the opening bell. All right, guys, have a great evening out there. Get some rest. Adios, amigos. Bye-bye for now.